Good morning, you're watching News 9. I'm Karthik Malhotra. We've got a power-packed show ahead of ourselves. First up on the show, Avadhut Sathe, a finfluencer. His Karjat Academy has been raided by market regulator Sebi in an alleged 500 crore rupee scam. We'll bring you all the details of Sebi's crackdown on finfluencers on the show this morning. Well, also on the show, India finds itself at a crossroads. At one end, there is Putin's oil, then there is China's trade, and Donald Trump's ire. How's India going to navigate itself in this mixed signals world of geopolitics and geoeconomics? We'll have a discussion of that on the show this morning. And also, of course, on the show, GST 2.0, the biggest reforms after 2017. Well, the group of ministers has approved the centre's proposal. What next before GST reforms come into action? All that and more on the show. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, on Friday morning, these are the headlines that we're tracking for you. External Affairs Minister S. Jaishankar meets Russian President Vladimir Putin in Moscow, calls India-Russia ties the steadiest of partnerships, pushes for balanced trade and stronger cooperation in energy, fertilizers and skilled workforce. White House trade advisor Peter Navarro accuses India of acting as a laundromat for Kremlin, dismisses its justification for Russian oil imports. India's exports to China rise 20% in the first 4 months of FY26 to $5.76 billion, driven by petroleum, electronics, chemicals and gems. China backs India against US tariffs as envoy vows support and offers access to Chinese markets for Indian goods. Sebi launches search and seizure operations at trader Avadhut Sathe's Karjat residences, seizes devices and data in the crackdown. States back centre's proposal to cut GST slabs from 4 to 2 with 5% on essentials, 18% on standard goods and 40% on thin items including luxury cars. And SBI research projects India's FY26 growth at 6.3% against RBI's 6.5% forecast, flags muted private capex and US tariff impact. Dream 11 to shut real money gaming arm after Lok Sabha nod to online gaming bill. And Uber partners with NCRTC to boost last mile connectivity on Delhi Meerut Nemo Bharat corridor to deploy cars, auto and two-wheelers across 25 stations, aiming to cut congestion and pollution. The big story that we are bringing to you this morning, a team of Sebi's enforcement wing launched a search and seizure operation at Karjat at 6:30 a.m. on August 20th. In the eye of the storm is Avadhut Sathe, a finfluencer who has been under the regulator's scanner for months now. Sebi's whole-time member Kamlesh Chandra Varshe said the action was aimed at sending a signal that Sebi is intensifying enforcement against market influencers who misguide retail traders under the garb of education. Now, Sathe, often branded a market guru on social media, runs the Karjat Trading Academy and has built a wide following among retail investors. His YouTube channel boasts almost 1 million subscribers. Now, Sebi's sustained crackdown on finfluencers began more than 2 years ago as it endeavors to strengthen market discipline by going after social media influencers who allegedly trick followers into believing they can make a quick buck on the markets by following their prescribed strategies or even stock picks, thereby influencing markets without the credibility of SEBI-registered investment advisory. Now let's get more on who Avadhut Sathe is and what specifically SEBI has against him in a reportedly 500 crore rupees scam operation. Amit Ranjan, News 9's executive editor, has been following this story and joins me for more on this morning. Amit, good morning. First up, who is Avadhut Sathe and what's the Karjat Academy that he runs?
Good morning, Karthik. Avadhut Sathe runs the Avadhut Sathe Training Academy, which is headquartered in Bombay. It has offices in almost every big city in India: Bombay, Delhi, Chennai, Hyderabad, Bengaluru, and many, many more. They have offices, offshore offices, even as far as North America. They have their YouTube channel has, as you mentioned, has almost 1 million subscribers. Their offshore support comes from 600 members. That is the offshore support. Then they have something known as the Avadhut Sathe Training Academy Satsang Centers, which has 200 centers across. These guys have a very well-defined digital infrastructure, which they call the digital learning system. So that is how well-defined they are. They have their own trading log management system as well, which is basically designed for them. They train students in what they call meaningful trading and trading for results. These are the epithets. They have borrowed from Alexander Dumas as an acronym, AFOOSA, all for one, one for all. And that is the acronym they give to their students who are being trained in trading. So that is how well defined and expanded their empire, if you can call it so, is.
Right. And Amit, also help us understand that SEBI has been pretty clear that non-SEBI registered investment advisors are detrimental to market discipline. Now, is Sathe going to be made an example of?
It looks so, and most of these finfluencers have millions of followers, and they are used by mutual funds also. But if you see any of the news channels, including ours, when we get market experts, we put on a disclaimer, and these guys are registered market expert, trading experts, and despite that we put on a disclaimer that the stocks they are talking about, they may or may not have stakes in those. So but these people, Avadhut Sathe is a non-registered member, and he does it in the garb of training students.
Right.
If you're training students, you are supposed, SEBI's law says that you have to have the trades that you put in your curriculum have to have a lag of 3 months in the values that you put to the students.
All right.
Now, but if that law is not followed, then you are giving them the trading advice in the garb of training.
All right. So this is education, and the garb here seems to be education. But what these influencers allegedly are offering is trading tips and stock tips, which retail investors could perhaps get duped by. But Amit, I also want to understand, we've seen SEBI has been after this finfluencer community for over 2 years now. Now, how large is this menace really that SEBI is going after? Is there some data, are there some numbers that you can share with us this morning?
See, numbers are as many followers or as many subscribers every mutual fund has. Every mutual fund takes the help of distributors. Who are these distributors? They are basically finfluencers who influence investors into subscribing to a mutual fund or an SIP. So, and the mutual funds have tens of thousands of distributors, and most of them are finfluencers. And finfluencers have huge followings. We can name a few. Ankur Warikoo is one. Ms. Ranade is another. Avadhut Sathe is another. So how can you, the numbers are as big as all the mutual funds put together that are there in the market. So that is how big the market of influencers is.
And where does this leave the market regulator now? Because you go after one, another one pops up. Is the legality of such bans on finfluencers watertight, or is there more that needs to be done by way of reforms in the law?
No, I can quote some of the market experts, Mr. Sandeep Parekh being one, as in January early this year when SEBI had reiterated the laws against finfluencers. These market experts are of the view that the laws, one, they lack teeth, and two, they are a little vague. Now, if mutual funds are taking the help of finfluencers, and every mutual fund has tens of thousands of distributors who are finfluencers. How do you monitor each one of them? And SEBI says they'll monitor every movement. How you cannot have a force that monitors the movements of each of these. You can't put a track on each of these people's movements, whom they are meeting, whom they are influencing. So the laws, one, they lack teeth, two, they need to become little practical to basically be enforced in a meaningful manner. Otherwise, we can just set example, and Mr. Avadhut Sathe will be one, that SEBI is setting an example that if you come under our radar, we will take action.
Amit Kumar Ranjan there joining us from the newsroom with the updates on this story. Amit, thank you so much for your time this morning. Of course, we will be tracking the entire influencer story here for you on News 9. But meanwhile, let's move on to other news that we have for you this Friday morning. External Affairs Minister S. Jaishankar, who's on a 3-day visit to Moscow, met Russian President Vladimir Putin on Thursday. Now, earlier in the day, Jaishankar held wide-ranging talks with his counterpart, Sergei Lavrov, with a strong focus on trade, energy, and the broader strategic partnership. In his remarks, Jaishankar said India and Russia have been among the steadiest of partners since the Second World War, stressing that the relationship goes beyond politics into areas like defense, science and technology, economic investment, and people-to-people exchanges. Remember, India is seeking a more balanced trade relationship with Russia as it currently runs a huge deficit. In 2024-25, India's exports to Russia stood at just under $5 billion, while imports crossed $63 billion, largely driven by crude oil purchases. To address this, Jaishankar called for swift removal of non-tariff barriers and regulatory hurdles, particularly in sectors like agriculture, petrochemicals, textiles, and marine exports. Both sides have also agreed to ensure long-term supply of fertilizers, deepen energy cooperation, and expand labor opportunities for Indian skilled workers in sectors such as IT, construction, and engineering. Now, remember, on Wednesday, India and the Eurasian Economic Union signed the terms of reference to launch negotiations on a free trade agreement aiming to boost bilateral trade to $100 billion by the year 2030 from an estimated $69 billion this year. Let's listen in to Dr. S. Jaishankar.
We are not the biggest purchasers of Russian oil, that is China. We are not the biggest purchasers of Russian LNG. I'm not sure, but I think that is the European Union. We are not the country which has the biggest trade surge with Russia after 2022. I think there are some countries to the south. We are a country where actually the Americans said for the last few years that we should do everything to stabilize the world energy markets, including buying oil from Russia. Incidentally, we also buy oil from America, and that amount has been increasing. So, quite honestly, we are very perplexed at the logic of the argument that you had referred to.
External Affairs Minister Dr. S. Jaishankar there answering a reporter question on India's purchase of Russian oil. And soon thereafter, we also heard White House trade advisor Peter Navarro, who has hit out at India's energy ties with Russia once again. Now, speaking to reporters, Navarro accused New Delhi of acting as what he calls a laundromat for the Kremlin and dismissed as nonsense India's argument that it needs Russian oil to meet energy demands. He went further, saying India refuses to acknowledge its role in fueling the bloodshed in Ukraine and is instead cozying up to Chinese President Xi Jinping. Let's listen in to the strong remarks coming from Peter Navarro.
I see that taking place. India doesn't appear to want to recognize its role in the bloodshed. It simply doesn't. It's cozying up to Xi Jinping. Is what it's doing. It's not act. And by the way, I wrote that article in the FT just to deal with the propaganda of the Indian government to make people want to feel sorry for them. Oh, they need the oil. They don't need the oil. It's a refining profiteering scheme. It's a laundromat for the Kremlin. That's the reality of that. So I love India. Look, Modi's a great leader, but please, India, look at what your role here is in the global economy.
Mithali Nikore, founder and chief economist, Nikore Associates, joins me this morning. Mithali, good morning. Thank you for your time. The statement from Peter Navarro soon after we heard India's External Affairs Minister Dr. S. Jaishankar in Moscow, pretty much coming back within 24 hours, the second statement coming from Peter Navarro, literally slamming India for its oil purchases from Russia, now going on to say that India claiming that it needed Russian oil for its own domestic use is nonsense, to quote him. And he also went on to say that India is the laundromat for the Kremlin. Strong statements coming. Do you see this as a sign of frustration from the US administration that they haven't been able to stitch up a trade deal with India and they haven't been able to end Russia's aggression in Ukraine?
Absolutely, Karthik. Good morning. And honestly, I think the foreign minister's statement, Mr. Jaishankar's statement, it comes after some pause, right? We were waiting. I think we were all sort of looking to see when is the foreign minister going to really make a statement on these issues. I think the prime minister's statement on 15th August really set the tone. And then we see this statement from Mr. Jaishankar where he's using very clear data and facts to lay out India's position and to refute, some of these international charges that are being put on India. I think it's really, very honestly, as an independent observer, I can say that this is the kind of narrative that the US builds around any country that they want to single out in the international markets. They built this narrative around China previously. They've done this narrative around Russia, and they've done it for many other countries. And this time, what is different, however, is that the European countries and the UK are not following the narrative that the US is setting out. I mean, the
That's
UK
right.
has gone ahead and done a trade deal with us, and so is the EU. So I think people are not listening that way to the US, and I think that is more frustrating to them as opposed to India not falling in line.
That's right, Mithali. And, another thing that Peter Navarro had stated was the fact that he's quoting data, but the data is out of context because he's saying prior to 2022, India was hardly buying any oil from Russia and the oil purchases increased after 2022. So while the data may be correct, the context is missing simply because we started getting the discount on Russian oil only after the sanctions that the rest of the world had put on Russia. And that is when India was able to protect its own domestic interest. Add to that, the then White House administration and Indian government has come on record to state had supported India's decision, if not urged India to buy oil from Russia to keep oil prices stable. So again, I mean, you have the US administration literally lashing out at India and this frustration being so palpable.
Absolutely, Karthik. I mean, I think when you hear senior voices like Nikki Haley, for example, who has pointed out that India has, for the last 25 years, successive administrations in the US, be it, starting from the time when we saw, President Obama coming to India, engaging with Dr. Manmohan Singh, the nuclear deal that happened, how Condoleezza Rice was, one of the figures, in the previous US administration, to really strengthen the relationship between US and India. And, in successive administrations, you've seen even the previous Trump administration, there was a very clear bonhomie between President Trump and Prime Minister Modi. And that is, in fact, the reason why President Trump, during his re-election campaign, secured such a huge support from the Indian voting base and from the Indian Americans who are based in the US, who have contributed even financially to his campaign. So, now the souring of relations is absolutely illogical in that sense, because again, it's not based on evidence, it's not based on data, it's rather being based on, observations that may, at best, be termed spurious.
Mithali, well, thank you so much for your input on that story, Mithali, this morning. And as always, a pleasure having you here with us on News 9. And as India finds itself on this crossroads between US on one side and Russia on another, there's a third actor, and that happens to be China. And India's exports to China have shown a strong surge this fiscal, rising 20% year-on-year in the first 4 months of FY26 to as high as almost $6 billion. Official data shows every month from April to July recorded higher shipments than last year. The highest exports were in the month of May at $1.63 billion compared to $1.32 billion in the month of May 2024. Now, in June, shipments were up 17%, while in July they touched $1.35 billion against $1.06 billion in the previous year. Officials say the consistent month-on-month rise reflects India's growing export competitiveness and a gradual rebalancing of trade with China, where India has long faced a large deficit of nearly $100 billion. The growth was powered by strong demand in energy, electronics and agri-based products. Petroleum product exports nearly doubled to $883 million. Electronics jumped more than threefold to $521 million, while chemical exports grew over 16%. Gems and jewelry also recorded a 73% rise. And with that, we will slip into a short break right here on News 9. Coming up on the other side, all the market action and what should you as a retail investor read into the market sentiment. Mohit Gang will be here to take us through his inputs.
बढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
तो अपने सोने को काम पे लगाइए, आज ही कॉल कीजिए 1-800-313-1212 पर।
Maya, what do you like the most?
I love my Doda. Papa, let's go to Doda. Happy birthday, Doda. Doda. Go, Doda, go.
Even I love my Doda.
I love my Doda.
Doda.
I love my Doda.
Skoda.
बेस्ट है सर।
पर नया क्यों?
आर्किटेक्ट जी, समथिंग स्पेशल फॉर यू। बिरला ओपस अश्योरेंस देने के लिए।
ऐसा क्या है इसमें?
इसमें है एडवांस क्वालिटी। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे।
वो भी फ्री। क्वालिटी पे इतना कॉन्फिडेंस, इसीलिए बिरला ओपस अश्योरेंस। रजिस्टर करो birlaopus.com पर।
Hi, this is Baman Irani.
Hi, this is Karishma Tanna. Hi, I'm Nushat Bharucha. Catch this conversation on News 9.
Catch this conversation on News 9.
Catch me and this conversation on News 9.
Hi, this is Shahid Kapoor and catch this conversation on News 9.
Welcome back. You're watching Morning Brief at 9 right here on News 9. Let's bring you all the action from the stock markets as it just opened a few minutes ago. Well, it seems to be a negative start for markets this morning. Some sort of choppiness and correction mode quite visible in trade in the early first few minutes at least of the morning market open action. Let's look at the charts. The Nifty 50 and Sensex are both in the red this morning. Nifty 50 racing below that 25,000 level. Sensex meanwhile holding comfortably above the 81,600 odd levels. Let's look at the Nifty 50 heat map and try and see which are the sectors which are reeling under some sort of pressure this morning. It seems to be the energy stocks. Reliance Industry is down about 0.6% or so. ONGC down about 0.3 percentage point this morning. Pain also visible continuously on the IT sector. You've got HCL Tech down about almost 0.75 percentage point. Infosys also more or less flat, but TCS down about 0.4% or so this morning. The banking sector also reeling under some pressure. ICICI Bank is down almost 0.8% in early trade. Meanwhile, HDFC Bank is down about 0.5 percentage point or so. Bharti Airtel, which had seen 2 days of consecutive rise, is more or less flat this morning. Nothing new really in terms terms of investor action. But what should you, the retail investors, read into these charts and this choppiness that we are seeing last few days in the markets? Mohit Gang is here to run us through what he's making of it and what he would expect you to do it. Mohit, good morning. Thank you so much for your time this morning, and help us understand from a retail investor perspective, this little bit of up, little bit of down, massive rises, massive corrections on particular days. How should retail investors read these charts?
Hi Karthik, morning. Always a pleasure to be on your show. Look, I think the world has become far more unpredictable than what you and I can possibly think and debate about. Okay. I think geopolitically the situation changes overnight. Every day there is a new reality which dawns upon us. Right, so there is a peace talk, so-called peace talk between Trump and Putin, and again morning you wake up and you figure out that there has been heavy bombing and there is a fresh wave of attacks on Ukraine. So it's very unpredictable. From a retail investor perspective, it's actually extremely difficult, not just from a retail investor perspective, from any investor perspective. It's very difficult to track all these events and to make sense out of it, right? So no one would have thought that China would perhaps issue statements in favor of India, right? So these are all new geopolitical realities which are dawning upon us. So my sense is, for a retail investor, you don't have to jump in with every rally in the market. You don't have to redeem with every correction in the market. You have to just patiently bide out time. And I repeat, you have to just patiently wait for the opportune time to come and knock upon us. Look, on a valuation side, there is no doubt that India is quoting at a very higher band of valuations. There is no earnings growth, and you have the tariffs and trade tantrums which are coming upon us. So there are a lot of headwinds which we have to face, right? So my sense is, you have to just gradually keep dipping up your toes in the choppy waters, not be completely out of it. You cannot be out of it, because one single piece of news can completely change the morning when you wake up, completely change the markets, right? So you have to keep dipping in your toes, but not completely try and measure the depth of flowing water with both your feet. So that's the only thing which I can say.
So what should be the strategy at this point, Mohit, when you wake up to this uncertainty every morning and this choppiness every morning, not knowing which direction the market is going to move the next day, because God alone knows what Trump is going to announce at night after Indian markets have closed? What should be the strategy? Just stay invested in your mutual funds, SIPs, so that you get a basket of stocks which sort of overall manages the volatility which emerge from specific sectors or specific stocks? Should you go for index-based investing, passive investing, or should you be picky about the sectors where you should put your money at a point like this?
Look, I would still go with a classic way on this one, which is investing in a diversified basket of mutual funds, going with your time-tested large caps and flexi caps, more towards the safer side of or more towards the conservative side of the horizon, basically, and keep doing your regular monthly allocations. Look, you cannot stop your monthly SIPs, STPs which are going on, because that's your accumulation strategy. Whether it will create wealth or whether it will create returns for you in a year or so is a debatable topic, but it definitely will help you accumulate a corpus which at a later point in time, perhaps 3 years, 5 years down the line, will create significant amount of returns or value for you, right? So that's the ploy one has to take. Keep doing your SIPs and be safe in mutual funds. Don't try and take sectoral funds, because sectors also are changing very, very dramatically, very frequently, right? So if there is a high tariff on a particular sector, you might not know which way the fortunes swing. So better to be in a diversified flexi cap kind of a theme, where the fund manager is actually executing the calls on sectors and market caps on investors' behalf, and just play a little conservative right now.
Right. So of course you mentioned those who have a slightly longer time horizon, 3 years, 4 years, 5 years, but those who have a shorter time horizon at this point, Mohit, should they be dabbling into markets at all, or should they look at other tools available, like perhaps mutual fund, I beg your pardon, like perhaps fixed deposits? But again, at a time when RBI has cut rates, those options don't seem as lucrative as they did perhaps more than a year back.
anything which is any pot of money which is less than 3 years, Karthik, has to be very cautiously deployed in. I would refrain from putting that pot of money into equities. At best, you can take a hybrid call if the pot is greater than, let's say, 2 years, or it's between 2 to 5 years kind of money. Then you can take a hybrid call. Again, depending on your time tenor, you can take a conservative hybrid approach, or you can take a slightly aggressive or a balanced advantage kind of an approach. Right? From a fixed deposit perspective, yes, you are right. The rates will keep coming down. Having said which, I think at any point in time, the rates just reflect what the overall inflation scenario in the economy is and what should be your outlook for a safe rate of return from the economy, right? So even the returns on the liquid funds and the shorter duration debt funds will keep coming down from a YTM perspective, but that's the reality. So you can't do away with it. So my sense is for people who want to play within a year, kind of a band, they have to keep at the shorter end of debt funds. People who want to play between 1 to 2 years perhaps can go into categories like equity savings or arbitrage or these kind of categories. And from 2 to 4 year kind of a perspective, you can start getting into hybrid funds, but nothing in equity for a shorter tenor.
All right. And what's your view on gold with the festive season around the corner? Demand likely to increase despite the prices, gold hovering around the 1 lakh rupees per 10 grams mark. Is this the time to start accumulating at least a little bit in the run up to the festive season, and that is when you could perhaps look at cashing out?
It's a very tricky call, Karthik. To be very honest, I think gold has run up a lot. Honestly, to go all out and give a buy call at these levels is very difficult, even for a braveheart or a die-hard gold fan like me. I would not do that, honestly. I think though gold as an allocation in your portfolio, a 5 to 10 or 10 to 15% is always a must-have. So there is absolutely no doubt you should continue to have that allocation. But would you go all out and buy it, accumulate it right now? I would rather not.
All right, Mohit gang, thank you so much. As always, pleasure having you here with News9, with all those gems that you dish out at our viewers every time you're here. Thank you so much for your time. And let's move on now. A crucial meeting of the group of ministers on GST rate rationalization ended with states agreeing to the centre's proposal, simplifying the indirect tax structure by reducing the slabs from 4 to just 2. Now, the 6-member panel chaired by Bihar Deputy Chief Minister Samrat Chaudhary approved the plan to replace the current 5, 12, 18 and 28% rates with only 2. That's 5% for merit goods or essential goods and 18% for standard items. A higher 40% levy will continue on a limited list of sin goods, or what the government calls demerit goods, with luxury cars now brought into this category as well. Finance Minister Nirmala Sitharaman, who addressed the panel earlier, said the move will provide relief to the common man, farmers and the middle class, as well as MSMEs, while ensuring a simplified and transparent tax system. Now, under the restructuring, nearly all items in the 12% bracket could potentially move to 5%, and most in the 28% slab will shift downwards in the 18% slab, barring a few sin goods, which will move to a higher 40% tax slab. The centre believes this will ease compliance, boost growth, as well as improve collections. And the group of ministers also reviewed a separate proposal to exempt GST on health and life insurance premiums for individuals. Now, while most states supported the idea, they sought safeguards to ensure insurers actually pass the benefit to policy holders. However, this exemption could mean a revenue hit of nearly 9,700 crore rupees annually. But remember, the insurance veterans and the industry is also coming on record to state that a cut in GST on health and life insurance may deny them the input tax credit, which could indeed make premiums more expensive, if not at best stay the same. Now remember, the recommendations of the GOM will now be placed before the GST Council at its upcoming meeting, tentatively scheduled for September 18th. Shiva Mehta, Executive Partner, Lakshmi Kumaran and Sridharan joins me this morning to help us make sense of all these changes that we are seeing by way of GST reforms, GST 2.0, Next Gen GST. Shiva Mehta, good morning. Thank you for your time. Just help us understand what happens next if the GOM has given its approval to the centre's proposal. Is there a greater likelihood now for the GST Council also to go ahead and ratify this new structure?
First of all, good morning to you and your viewers. It's always a pleasure to be on your show. Like you just said that yesterday they have given a nod to the changes which was announced by our Prime Minister on 15th of August. Now the next step will be GST Council, which is expected to meet in the first week of September. And most likely than not, once this announcement has come after the monsoon session, it looks like this entire amendment which they have proposed might get ratification of the GST Council. There should not be any major changes in that. That's my understanding on it. And thereafter, what they're expecting is this entire benefit should go to the consumer the beginning of Diwali. So I'm expecting these changes should be introduced from 1st of October because Diwali is around the corner. It's on 20th October. So yes, I think GST Council is supposed to meet twice, first week of September and third week of September. I think the whole agenda will be to get this decision ratified from them. So I don't see real challenges. We are up for some major rate changes and customers are going to get real Diwali gifts or benefits.
Right. So once, assuming if it does, once the GST Council ratifies these rates, how quickly will they come into effect?
So after GST Council ratify the rates, they will be coming up with the notifications. Notification can have an effective date. As I said, because the announcement is to get these amendments in place before Diwali, I am hoping the notification may have an effective date from 1st of October.
1st of October seems to be the effective date. All right. Shivam, I also want to understand from you that that overall there are mixed reports coming on what could potentially be the boost in consumption by way of this rate cut, but potentially what could also be the loss to the government when it comes to tax collection. Now, SBI Research had come up with a report which suggested that as much as 85,000 crore rupees worth of tax loss could accrue to the exchequer. And at the same time, there could be a consumption boost of as much as 2 lakh crore rupees. Now, there are multiple views coming on numbers and what impact it could have. So while there is a larger understanding that there could be a boost to consumption, perhaps not on essentials, not on the current 12% category, which could move to the 5% category, but the 28% category that moves down to the 18% category, especially in the festive season. But then what does government do with the potential tax revenue loss?
See, I think it's very difficult to predict what will be the actual losses. I have also read reports which are varying from, you were talking about 85,000 crores. I have a report saying it is as big as 1.1 trillion. So there is mixed bag. The expectation is there will be loss of 0.3 or 0.4% of the GDP.
Right.
The way this loss can be compensated, my sense is by way of cess, which they probably will have on luxury cars, etc. And another could be by way of the dividends of RBI, etc. That's what the reports also suggest. Of course, there'll be a boost in the demand, particularly the products like televisions, air conditions, washing machines. All of them will come down to 18% category. Also, auto components, they will come down to 18% category. So we see a lot of, in fact, small cars, the cars which are less than 4 meter, they may come down to 18%. Right now, they are at 28%. So this definitely should boost the demand. And once there is an increase in the demand, these losses may get offset.
All right, Shiv Mehta, as always, pleasure having you here on News9, and thank you for your input to this story.
Thanks.
And staying with the Indian economy, India's economic growth is expected to be slightly lower this year than what the Reserve Bank of India has projected. This as per an SBI research report released. The economy may expand at 6.3% this year compared to RBI's projection of 6.5%. The report estimates that first quarter GDP growth will come in between 6.8% and 7%, but then gradually ease in subsequent quarters. 6.5% in Q2, 6.3% in Q3, and down to 6.1% in the fourth quarter. The key concern flagged by SBI Research in its report is muted private capital expenditure. A survey of over 2,100 enterprises across sectors including agriculture, manufacturing and IT shows intended capex for the next fiscal is already lower than last year and could fall further, with US tariffs likely to hit export-oriented sectors such as textiles, gems and jewelry, leather, chemicals, agriculture as well as auto components. The report, however, emphasizes that the critical role of public capital expenditure, calling it a persistent and structurally sustainable driver of growth rather than a short-term policy push. And before we slip into another break, let's look at all the global stories that we are following for you this Friday morning. US President Donald Trump sharpens his offensive against California, warning that school districts refusing to follow his transgender policies will lose federal funding. The Trump administration gains power to slash hundreds of millions in research funding after the US Supreme Court allows $783 million in cuts at the National Institutes of Health to move forward under Trump's priorities. The US immediately halts issuing visas for truck drivers. Secretary of State Marco Rubio announces following outrage over a fatal crash involving an Indian driver in the country. US President Donald Trump sets a 2-week deadline for assessing Russia-Ukraine peace talks, stepping up his push to negotiate an end to the long-standing war. Ukrainian President Volodymyr Zelensky signals readiness to meet Vladimir Putin, but only once Kyiv's allies agree on security guarantees to prevent future Russian aggression. McDonald's slashes menu prices in the US after striking a deal with franchisees as more Americans cut back on dining out. The company plans to subsidize discounts to support the move. Meanwhile, Sony announces a $50 price hike for all PlayStation 5 models in the US starting Thursday as tariffs and supply chain costs weigh on the gaming industry. Eurozone firms record their first rise in new orders since May last year, driving business activity in August to its fastest pace in 15 months despite weak exports. And Meta reportedly strikes one of the biggest deals in Google Cloud's 17-year history, a $10 billion 6-year agreement to boost its computing capacity. All these stories on the other side of the break. You're watching News 9.
Go condoms?
It's over there.
क्या ये different sizes में आता है?
Actually, sir, size matter नहीं करता.
तो फिर क्या matter करता है?
The hardness
of the condom.
of what's inside.
For the first time ever, presenting Hard Rock Gel.
अब free हर score condoms के 10 pack के साथ.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
Papa, let's go to the happy birthday to the. I love you. Go to the go. I love my Dada. I love my Dada.
Skoda.
आर्म पेन रिलीवर एरोसोल स्प्रेस में है, दवा के साथ हवा, मगर डायनापावर QPS प्लस में है सिर्फ दवा ही दवा. इसलिए डायनापावर QPS प्लस चले ज्यादा. डायनापावर QPS प्लस सिर्फ 91 रुपए में. लगा के देखो, मान जाओगे.
देखो तुझको जो मैं हो जाऊं पागल.
You glow different when you're in love. 16 million shades of love to choose from. Unlimited love. B6. Mahindra Electric Origin SUVs.
Welcome back. You're watching News 9. This is Morning Brief at 9. On to all the global stories that we're tracking for you. US President Donald Trump warned Thursday that California school districts refusing to follow his administration's transgender policies will lose federal funding. Now, the move follows Trump's February executive order cutting funds for schools that permit transgender women and girls to compete in female sports. The Trump administration also sued California in July, challenging the state's rules that allow transgender athletes to compete, arguing it violates federal anti-discrimination laws. The Trump administration can now slash hundreds of millions of dollars worth of research funding in its push to cut federal diversity, equity and inclusion efforts. A split verdict in U.S. Supreme Court lifted a judge's order blocking $783 million worth of cuts made by the National Institutes of Health to align with Republican President Donald Trump's priorities. The decision marks a win for Trump and allows his administration to forge ahead with cancelling hundreds of grants while the lawsuit continues to unfold. US President Donald Trump's administration on Thursday abruptly stopped issuing US visas for truck drivers after a fatal crash drew national attention, its latest sweeping step against foreign visitors. US Secretary of State Marco Rubio wrote on X, and I quote, "Effective immediately, we are pursuing all issuance of worker visas for commercial truck drivers. The increasing number of foreign drivers operating large tractor-trailer trucks on US roads is endangering American lives and undercutting the livelihoods of American truckers." Rubio's action comes after a truck driver was charged with killing 3 people on a highway in Florida while making an illegal U-turn. Harjinder Singh, who is from India, allegedly entered the United States illegally from Mexico and failed a mandatory English examination after the crash, according to federal officials. The case has gathered wide media attention and has been highlighted by officials in Florida, controlled by Trump's Republican Party. And McDonald's is slashing prices in the US as more Americans cut back on eating out. According to the Wall Street Journal, one of the country's largest fast food chains has struck a deal with its franchisees to roll out deeper discounts, with McDonald's offering financial support to cover the price cuts. Here's a detailed report.
McDonald's is cutting prices in the US as consumers rein in spending. That was according to the Wall Street Journal on Wednesday. The news follows weeks of discussions with restaurant operators concerned about the change. It reportedly sees the company offer financial support to franchisees if they agree to drop prices. The move is meant to win back diners worn down by economic woes. McDonald's will now discount 8 popular combo meals by 15%. The Journal says it will also offer $5 breakfasts and $8 Big Mac and McNugget meal deals later this year. They will be marketed as extra value meals. The company declined to offer a comment on the report. McDonald's has already benefited from its existing affordable meal bundles. Earlier this month, they helped it beat Wall Street estimates for second quarter sales. Rivals including Domino's Pizza and Taco Bell owner Yum Brands have also been doubling down on value meals. The fast food industry has been battling to counter a slowdown in demand, mainly among lower-income families.
And even as McDonald's cuts prices, Sony's PlayStation 5 is about to get more expensive for American gamers. Starting Thursday, that's yesterday, the Japanese tech giant says all 3 PS5 models will cost about $50 more. The move comes as the video game market struggles to rebound amid US tariffs that add pressure to supply chains and materials. Take a look.
Sony's PlayStation 5 is about to get more expensive in the US from Thursday. Gamers will have to pay around an extra $50 for the device. The Japanese firm is dealing with a slow recovery in the video game market, while US tariffs threaten to raise costs. Sony said all 3 PlayStation 5 consoles will see a similar price hike. The most expensive PS5 Pro version is expected to cost just under $750. The price changes come after US President Donald Trump announced sweeping tariffs earlier this year. it targeted imports from global manufacturing hubs such as China and Japan. It's led to fears of supply chain disruptions and high material costs. Sony had raised prices of its consoles in various European markets in April. Rival Xbox also hiked sticker prices of its consoles and accessories in a number of regions a month later.
And moving on to Wall Street now, the main indices fell Thursday as investors feared potentially hawkish remarks by the Federal Reserve Chair Jerome Powell on Friday that could spark volatility, while big box retailer Walmart's quarterly results also dampened the sentiment. Take a look.
U.S. stocks fell on Thursday, with all three of Wall Street's main indexes losing about 0.33% or slightly more. Investors feared potentially hawkish remarks from Federal Reserve Chair Jerome Powell when he speaks Friday from the central bank's annual symposium in Jackson Hole, Wyoming. With traders pricing in a roughly 80% chance of a September rate cut, any hints that's off the table could spark market volatility. A weakening labor market combined with an uptick in inflation has put the Fed in a tough spot, says Chris Carey, VP Portfolio Manager at Carnegie Investment Counsel.
The Fed has a bit of a unique game to be playing from the chairman's position, which is that for the first time in quite a while, the majority of his governors aren't all on the same page with regards to which direction to take rates. I think that we have a 25 basis point cut locked in. The general market consensus, we might see another 25 basis points between now and the end of the year. But really, it's a better idea of policy direction and how Fed Chair Powell is going to be able to corral the rest of his governors to be on board and set a clear path forward.
Stocks on the move Thursday included Walmart, which fell 4.5% after the retail giant raised its fiscal year sales and profit forecasts, but missed quarterly profit estimates and flagged higher costs from tariffs. Shares of Coty plummeted more than 21% after the beauty products maker forecast lower current quarter sales on weak U.S. spending. And shares of Cracker Barrel Old Country Store shed more than 7% after the restaurant chain unveiled its new logo, which no longer includes a man leaning on a barrel.
Moving on to news from Europe. Now, Ukrainian President Volodymyr Zelensky signaled willingness to meet Russian President Vladimir Putin, but only after Kyiv's allies agree on security guarantees for Ukraine to deter future Russian attacks once the fighting stops. Zelensky also said any meeting should take place in a neutral European country, ruling out a summit in Moscow, and rejected the idea of China helping to guarantee Ukrainian security. Russia, meanwhile, said that Ukraine did not appear to be interested in long-term peace, accusing Kyiv of seeking guarantees incompatible with Moscow's demands. US President Donald Trump has set a 2-week time frame for assessing the chances of a peace agreement, stating that Washington would have to maybe take a different track if the talks fell through. From why China might be considering the use of yuan-backed stable coins to the latest Russia-related sanctions imposed by Britain, we leave you with a roundup of some key crypto stories from this week. Thanks for watching.
From China's crypto shift to Britain's sanctions on Russia-related networks, this is Crypto Weekly. Sources say China is considering the usage of yuan-backed stablecoins to boost wider adoption of its currency globally. It would be a major reversal of China's stance towards digital assets. The sources added that Chinese leaders will review and possibly approve a roadmap later this month. Stablecoins are a type of cryptocurrency designed to maintain a constant value. They are often pegged to the US dollar and commonly used by crypto traders to move funds between tokens. The yuan's share as a global payment currency fell to 2.88% in June. That's its lowest in 2 years. In contrast, the US dollar commanded over 47% of market share. A group of finance industry bodies is calling for a rethink on regulatory standards they say will make it difficult for banks to participate in crypto markets. The Basel Committee on Banking Supervision comprises regulators and central banks from the world's main financial centres. It agreed a set of standards 3 years ago regarding the risks around bank exposure to crypto assets. In an open letter to the committee, the group said the crypto market has changed since then, and the proposed standards are too conservative. Britain this week sanctioned financial networks it said were being used by Russia to evade existing Western sanctions. They include Kyrgyz crypto networks. The sanctions against 8 individuals and entities also target the infrastructure behind A7-A5. That's a ruble-pegged stablecoin launched in Kyrgyzstan, which Britain said had moved $9.3 billion in 4 months.
Uttarakhand has been witnessing heavy continuous rainfall this season. Why did this happen? This is happening because of us, humans, and that's the fact. That whether it was an impending climate change, what should state governments be doing, sir? If we do not nurture Himalayas will not nurture us. After targeting India on its alleged high tariffs, New Delhi stands firm against Trump's bullying.
1 करोड़ वोटर्स ऐड हुए थे, जो हमें मिला है वो एटम बम.
I really expect that our political parties should respect for institutions which are mandated by the Constitution.
What is to the nines? In literal terms, it's perfection.